What can we expect from the commodities market with Russia having an impact on the oil market, but such an impact on the global wheat market?
I mean, what I think about Russia is it's a global commodity superstore. I mean, it's oil, it's gas, it's agriculture, it's metals. And the big concern over the weekend was a potential declaration of martial law that would lead to the closure of the major ports. So that's what the White House was really game planning. They were making calls to key producers. They wanted to signify, if there was a disruption, that they were taking steps to abate any crisis in the market. But again, markets are breathing a bit of a sigh of relief because the worst-case scenario did not play out.
Yeah, certainly not a worst-case scenario. I think we've seen a lot of our CNBC.com articles saying basically a sigh of relief for the oil markets and the commodity markets. I want to talk more broadly. How would you view the headline risk from this entire situation? Beyond oil and beyond commodities, we're talking just currency and just the impact on the global markets.
I mean, I think a lot of us were factoring in like a multi-year war in Ukraine with the Russians continuing at least to the U.S. presidential election. What we weren't factoring in is potential chaos in Russia. And what does that mean for the world's largest nuclear power? And so now I think that is something everyone is having to think about for the back half of the year. Yes, Prigozhin has gone to Belarus, but what does this mean for the state of security in Russia right now?
You're hitting on something right now. The leader of that armed rebellion being sent to Belarus. Now, I think a lot of us have a certain depiction of Vladimir Putin, and this seemed like a merciful end. Is that a good way to put it? And maybe even a surprising one. So what does that mean about the future of this Ukraine-Russia conflict and maybe just his position in the entire world?
I mean, Ian Bremmer was out this morning essentially saying Prigozhin is dead man walking. So what happens if Vladimir Putin does not take a strong stance against Prigozhin? Does that potentially invite more internal dissent? So we're just going to have to see how this plays out. But Prigozhin's forces were the ones that allowed the Russians to take Bakhmut. The question is, what does this mean for the Russian battlefield strength in Ukraine? But again, more importantly, what does it mean for internal stability inside Russia? I mean, you had a situation where they could take Rostov with very little opposition, concerns about his support within the security services. So we are now having to factor in potential internal chaos in Russia going forward.
Yeah, certainly something to watch. We want to add another voice to this conversation, Halima. Tina Fordham, she's a former Citi chief global political analyst and currently Fordham Global Foresight founder and geopolitical strategist advising boards and C-suites about geopolitical risk and social change. Tina, excuse me. Thank you for joining us.
Morning.
So I want to ask you, what about the headline risk here? We're seeing disruption, as Halima mentioned, in one of the world's biggest nuclear powers, also a big exporter of wheat and an oil producer. What does this do to the global markets? And should we be looking at the currency markets and other markets as well?
Well, what's interesting is that the weekend developments were undoubtedly the most significant political display in Russia for probably 30 years since I was in Moscow in '96 for the re-election of Yeltsin, and yet markets barely blinked. I think this tells us a few things, although it's pretty consistent with what we typically see historically, that important geopolitical developments often don't move markets unless there is a clear transmission mechanism. Halima has already made the case for why this is important, but maybe some softening in the ruble. Nothing that's happened suggests in a kind of a reduction in Russia's energy exporting capacity, but it is Russia's internal state stability, the future of leadership, and I'd focus on loose nukes a bit more than an escalation, a formal escalation in Ukraine. But we've got a lot more volatility than many were expecting. I think markets got used to the idea that the war in Ukraine would continue for some time. It kind of moved on. Now it's looking a lot more wobbly.
All right, so as you mentioned, wobbly. As investors look at this, of course, this is a show really focused on investments. Does this change any narrative about any U.S. sectors? When we're seeing wheat prices spike a bit, that's going to obviously change the input cost to a lot of companies here in the U.S. And in recent weeks, we've also been talking about defense stocks. Has that changed the outlook for those in your mind?
Well, we're going to have the NATO meetings in Vilnius, Lithuania, in 2 weeks' time. And one of the things that we're going to see, in my view, is a call for even more arms going to Ukraine. I do think NATO member states that haven't quite hit the 2% target are going to be pushed to do that. There's a much bigger understanding and appreciation, I would say, at the government level, that you need to fight fire with fire, that we are in what I call a new geopolitical risk super cycle. And so, yes, defense stocks benefit. U.S. markets, again, tend to be fairly impervious to geopolitical risk, but I do think this dampens risk appetite a fair amount. And certainly, judging by the emails and calls I had over the weekend from U.S. investors, people are watching carefully. They just may not be changing their portfolio allocations or making decisions on the back of this. It's a wait and see situation.
Okay. Yeah, I'm sure both of you had very busy weekends, both of your phones and emails kind of getting blown up over the weekend. So I want to talk to you, Halima. I want to bring it full circle back to the oil markets. I'm looking at WTI still below $70 a barrel, even after this level of disruption. And of course, OPEC cuts and Saudi Arabia voluntary cuts. When are we going to see more upside, or can we see more upside in the market if we haven't seen it already with all these disruptions?
Fantastic question, because I think the fact that we have not had major Russian disruptions is weighing on the market. When the war began, we had that massive run up in oil prices because people were thinking a 3 million barrel a day disruption out of Russia with sanctions. The fact that Russian output has remained resilient in the face of sanctions, price caps, has given investors a lot of concern about, are we an oversupplied market? And we have continued concerns about, softness in China. Despite good import numbers for China for oil, they're still concerned about the manufacturing sector. People saying, is this oil going into inventory? So it's the demand concerns plus the abundant supply, obviously, is weighing on the market. But people will have to watch now and think about, if we have internal issues in Russia, can Russian exports hold up? Again, everyone's breathing a sigh of relief, but we don't know if the story is over.
Yeah, a lot of questions, but what do you think? I mean, is this situation resolved for the most part, and will we continue to see Russian exports when it comes to oil, or are we possibly facing some real disruption?
Again, I think it's a great uncertainty. I don't think anyone had really penciled in, an internal uprising in Russia. Prigozhin reportedly has support in the security services. So the question is, what does this mean for Vladimir Putin's staying power?
All right, Tina, I want to come over to you with one key takeaway for investors today. Obviously, there continue to be questions about how this situation is going to fully resolve itself. But for investors, how would you view what we saw over the weekend, and how would you look at investing around this globally going forward?
Well, again, I see the developments as consistent with my thesis on the new geopolitical risk supercycle. I actually have been flagging internal fragmentation in Russia and disruption along the Russian periphery. I think what investors need to do in this case is view what's happening in Russia more through the lens of Goodfellas than James Bond.
You got to explain, Tina. You can't just throw that out there. You got to explain that one.
Russia as a kleptocracy and organized crime state rather than a kind of finely tuned intelligence machine. I hope that if any investors take away anything from the weekend developments, it is to put to rest this idea that Putin plays three-dimensional chess. He may not be on the scene for much longer after 23 years, and what follows him makes Russia a much riskier bet. Again, few investors are exposed in that respect. But what we need to think about is that transmission mechanism that takes regional geopolitical risk to something that affects global markets. That's what Halima talked about in commodities and grain. So this autumn, everything much in focus. And 2024, huge election year. US, UK, Russia and Ukraine, Indonesia, India, you name it, big democracies. So there's a lot to play for when it comes to geopolitics and the market impact, more than we're used to.